A plan is only as good as your discipline to follow it. In trading, the real edge isn't just spotting setups, it's respecting them. Hello traders, welcome back to Your Nifty Guy. In this video, I'll share my analysis and trade plan for Thursday, including key levels and possible market scenarios, so you can trade with confidence and clarity. If you find value in this daily series, don't forget to like the video, share it with your trading circle, subscribe to the channel, and drop your thoughts in the comments. Let's dive straight to the video. The reason why I started with the quote on sticking to your plan and discipline is something which I'll be elaborating shortly. So, with the planning that we did today with the levels, everything was drawn on the charts, and we were short below this particular blue zone, right? This is what we had discussed, and that is the reason why we had even uh, stretched this particular level so that it covers today's trading setup as well. But today was a no trading day for me. Now, as most of you would be aware, I only trade breakouts and breakdowns with a valid pullback. Markets opened with a gap down, again trapping people who would have carried long positions overnight. On 22nd, markets closed near the day's low, trapped people who had shorted, closed near the highs. Again, this was a doji, but again, the closing was much nearer to the highs compared to the lows. So, and again, people might have carried calls forward. Again, markets opened with a gap down, immediately went into a selling spree. Now, market is below the level that we have decided to short it. Market is looking weak. The premium on the put charts are exploding, right? Literally exploding. Still, I did not take an entry. So I believe this is the kind of discipline which I have. I will wait for my setup. I will wait for the pullback to come. And if the pullback is not coming, I will not be shorting this market, even if I have to lose whatever the gains that I could have made. The reason being simple. Today, I might not have made money in the fall. But this particular setup, the pullback concept that I have, the discipline that I will not be trading any breakouts or breakdowns without a valid pullback, has actually saved me a lot of times. So this is with error and learning and trial and error method, which I have tried. So initially, when I used to enter directly, I would have lost on many times, right? So as most of you know, most breakouts and breakdowns will fail, and that is the reason why I have put in this filter of a valid pullback, which is there. And that is the reason why I did not take this particular participate in this particular fall which came in. Now the pullback did come in, and had this fall around here broken down below this low, I would have happily entered into puts. But this did not break, and then market went into a sideways consolidation, which is also again in the form of a triangle, which is very similar to what happened around this particular day. The breakdown also came in, but then again, we have to wait for the pullback. The pullback did come in, but the breakdown of the pullback came in much later. Now, the breakdown which came around here from the triangle consolidation was a very good breakdown with a follow through, very beautiful pullback, come retest, anything you can name it. The science or the psychology behind it is what matters. And then eventually the markets did go down and gave us a closing near the lows of the day. So anybody who would have entered at 3 p.m. as well would have made money. But then I have a rule for myself wherein I don't enter into fresh trades post 2:45 p.m. because I am an intraday trader and I would like to close my positions on day-to-day basis. Itself, I do not like to carry forward my positions and entering into a position in later on in the day. You might be having again, the position would not have hit your targets, the position would not have hit your stop loss somewhere in between, and that is something which I am not comfortable with, and that was the reason why I did not enter into the trade. So like I said, spotting your setups, right? Okay, the planning, number one stage is planning. We have planned well, we have marked the levels on the chart. Number two is spotting, getting alert. Okay, markets have given us a closing below this particular level of hours. Now we have to wait with discipline, right? If we jump in, trust me, today again, many people will think that okay, you would who would have actually made money in puts today would be thinking that we made such a good amount of money in the puts today, whereas even with all your planning and everything, you did not make any money. Absolutely fine with me. Absolutely works very good with me. I am having zero FOMO, zero guilt of not taking this particular trade because I know my setups which have helped me in a very long period of time. I have back tested it for multiple years, and that is the reason why I have so much of confidence in sticking to my setup, in sticking to and having the discipline of actually not rushing into trades, but to wait for the trades, right? So my philosophy is let the markets commit to you before you commit to the market. On days like this, it's okay if I miss some profits. But then for me, as I have told multiple times earlier as well, safeguarding your capital is what matters most to me, right? So instead of taking random trades and without any proper setups, just looking at the puts premium exploding and just rushing into the trades is something which I do not do. I do not suggest others to do as well. So that is the reason why I feel that trading is just about 20% with the psychology, the setup, the planning, and everything. Whatever we discuss every day is just the 20% portion of it. The rest, 80% of it is the psychology portion. And if you are serious about trading in a long period of time, right? So one trading day does not just make you a trader or define you as a not a trader or not a good trader, right? It is the sum cumulative of all the trades that you take over a period of time, right? Say for the last financial year, all the trades that you have taken, are you in net profit or are you in net loss? Whatever be your time frame of consideration, be it last 1 month, last 1 week, or last quarter, whatever it is the sum cumulative of those all those trades that you've taken over that period of time is what will define you as a trader. So again, prices did go down much below our level of shorting. In case if we would have shorted here, we would have definitely made money. But then again, discipline is discipline, and I am 100% sure missing this particular day of trade has got nothing to do with what I can do the next day. The markets are not going anywhere. I am there and I can trade the very next day once everything is happening as per my setup, and market will give me entry as per my setup and as per the plan that I have, right? So I hope why no trading day for me was justified here, and I hope I am being able to explain clearly as to why I did not participate in today's trading activity. In case if you have any doubts, drop your questions in the comments. I'll try my best to answer them. Now, as far as trading for Thursday is concerned, tomorrow is a trading holiday on account of Ganesh Chaturthi, and markets are closed. Please spend the time wisely in preparing for Thursday, which is the monthly expiry. Guys, get charged up, get geared up for Thursday, and we'll be discussing the plan shortly. But before we start discussing the plan for the monthly expiry, word of caution for every one of you. Whoever is into option buying and is into trading Nifty, and if you are trading the monthly expiry on Thursday, please make sure to switch to the next week's options as your trading options throughout the day, except for the last part, last 1 hour Hero Zero trade, which I'll be again speaking about shortly. And whatever trading you do from the start of the day till about 2 p.m. should be shifted to the next week's expiry. You might be paying a slightly higher premium for your entries, but then you will be safeguarding your capital, which, as per me, should be the primary reason or the primary which should form the core of your trading is to safeguard your trading capital and not blow it randomly. And one easy way of blowing it is in trading in options which are expiring on that day. The theta decay is much faster, much quicker, and even if market you are in the right direction, market goes sideways for a couple of minutes or couple of candles on a 5 minutes time frame, you will still be losing money. So it is much better to shift to the next week's expiry and make good gains on those, even after paying a slightly higher premium on your capital. So the idea of a head and shoulder that we had been discussing is formed. Now let's quickly, as per technical analysis, what should be the decent 290, almost 300 points fall if market has to respect the head and shoulder pattern as per the textbook pattern. Uh, this is what the targets are roughly coming out to be 24,540. So this is what we can expect the markets to at least come down as per the technical analysis and bookish patterns. But then again, we will not be predicting anything, but we are definitely prepared for anything and everything. On a daily time frame, we can clearly see the weekly fib resistance that we had drawn. So actually will, if you see and go back, rewatch the couple of videos, you will be actually seeing how beautifully market has respected each level that we had drawn on the chart, right? So this was the weekly fib resistance. Markets went beautifully inside, took resistance directly, and you can see the reaction which has come in. Now this was a resistance on a smaller time frame of this entire fall from here, and you can see markets have again taken resistance beautifully. Now again, I am not someone to say that okay, if I have marked a level, prices are bound to react around these levels. No, absolutely not. I would be the last person to tell you that this is the place where you should take a short entry. Absolutely not. Whenever I draw the levels and I explain why I have them on the charts, and those are uh, levels around which you can expect some market activity. Now, do the prices react around that levels or do not react? That is something that the market has to decide. But definitely, these levels are key importance to us. Fib levels work like crazy, very, very beautifully on Nifty. And that is the reason if you will see whenever I do my analysis, I make sure to point out the recent fib levels or the fib levels based on the higher time frame. So this bigger rectangle around here, which is the weekly fib level, and as you can see, despite a very good gap up, the gap up sustaining, the markets took a resistance from exactly around these levels. Now, this is not a coincidence. Obviously, these levels hold meaning, and if markets have taken resistance around here, forming a low around here after retracement, markets have taken a resistance from the fib levels of a shorter, smaller time frame. So on a daily time frame, as you can see, sorry, I just got distracted. Uh, yeah, on a daily time frame, we have got a good breakdown candle. Now, what remains to be seen is a follow-through candle, right? Whether we get a follow through candle. Now, what do I mean by a follow through candle is I don't want any inside bar. Again, the chances of an bar are very much high. But what I want to say is even after maybe Thursday is an inside bar, but post Thursday, what I would want is a follow through candle in term of a candle which has a low, which has a low which is lower than this low, a high which is lower than this high, and I need a closing below this, right? So that will be a follow through candle. So whether the market is giving us a follow through or this is again a big trap and markets will reverse again, that is something we'll leave it to the markets. But for now, yes, the sentiments are bearish. Mr. Trump had again announced additional 25% tariffs going into effect from tomorrow. Maybe this is the market's way of reacting to those levels, but whatever it is, we have seen a good amount of fall, right? Now, on a 4 hour chart, what we also have is a gap area which is pending down here. Now, we do not need this level. We'll be deleting this. Just give me a quick couple of seconds. Right, I will quickly be from this low till this high. Okay. So now I'll just quickly tell you guys. So this is the market structure till around here. From this low, markets went to this high, created this new swing, and then went up, right? So that is the reason why I have taken this particular candle low on a 4 hour time frame, this candle low and connected the highs. And as you can see, I was looking at a area till which the markets can retrace, and as I had expected, we have already given us a closing below the 0.5 to 0.618 zone on this particular level, right? So this could have acted as a potential support. So right now, we do not need to draw any levels around here. What we can do is we can connect this last swing high, which was yesterday's high, with today's low. And we'll be having this as the resistance level. Now, for Thursday, number one thing, Thursday is the monthly expiry. Now, last two expiries were extremely, extremely sideways, and usually monthly expiries come with a sort of excitement and wild moves, especially after 2 p.m. So the expiry special setup that we have, anybody who has not watched the particular video, please go and watch the June month and monthly expiry special video, which is there, wherein I have explained that particular setup. So it's a very simple setup. All you need to do is keep a close eye on open interest and the change in open interest post 2 p.m. And in case you see major call or put writing at certain levels and then price actually going up or below that particular level, and those people exiting those positions. So that is something which will fuel either a short covering or a long unwinding. So that is something, a trade which I like to participate in on expiry days. And if only that particular setup is happening, I can see it on the OI chart and the change in OI. Will I be trading in the current week or the August end expiry, or else all the rest of the trading will be shifted to the next week's expiry, right? So you guys go and have a watch on that video. If you want me to make a dedicated video on the expiry special Hero Zero setup that I use, please let me know. That video will need to be recorded. Maybe sometime some experts of it have to be uh, recorded in live markets as and when I am observing those things. So I will take some time to record that video. In case if you guys want a video on that, put it down in the comments and I will try to make a video on that pretty soon. Now, for Thursday, the plan of action again has to be very, very simple. Number one trade. Today was a good trending day. We have broken down below the major level. If we see a bearish candle giving us a closing below, this trade is the rare trade that I keep speaking about. I don't know when Nifty will be giving me an opportunity to try and show a live example of it. But then nonetheless, worth the wait. It will happen very, very rarely. But whenever it happens, it gives a good trade with a very good risk to reward. So the for the trade to be happening or for us to be able to take that trade, all the scenarios have to be working perfectly fine. As per the setup, we need a bearish candle at the start of the day, which is giving us a closing below this particular low, which is today's low, and then the high of that candle needs to be taken out, right? The sentiment of the candle has to be bearish, and then the high of that candle needs to be taken out. What we need to see is fresh people entering into shorts, and then once the high of that candle or their stop loss is being triggered, which can leave us a good scalping trade on the upside. Now, this is a contra trade, so trade in case if this happens, trade in lower quantities and keep a strict stop loss as well as trail very, very tightly. In case if we are trading this, these around these levels of the swing high or these level will be the primary immediate target for me. Prices, whenever they come around the fib level, I will be looking at a negative price action to again take a short entry. Below this, which is today's low, with a valid pullback, will be a short entry for me, of course. And I will not be looking at any long entry till the time period we are below this fib level. Only and only long trades to be taken, only and only above this. Now, this again is a long trade, but then again, try to understand this is just a trade which is based on a trap, right? So this is something wherein people who would have entered shorts, they will be feel trapped once market moves above it. So this is based on a lot of confirmations. Plus, this is a scalp trade. But any trade on the long side with conviction with regular quantities we'll have to wait for prices to come back above this level, and only then we will be able to take this particular trade. Now, once again, this particular fib level has been drawn keeping in mind this high and this low. In case if market creates a new low intraday basis on Thursday, we might have to revise this particular level based on the low, whatever low has the market has created. So do not stick around to these levels. These levels are subject to change based on where the price is moving. Say, for example, market opens in between around here and no new low has been created, and then again tries to move up, take sessions around here, we can create a short entry. So that is the reason why this low holds, this particular level holds valid as long as this low is still the intact low and no new low has been made. So I hope the point is clear and the trade setup is clear. Do use your day off wisely. In case if you are full-time traders, please plan, backtest, review all the trades that you have taken the last 1 week, and focus on your setups, focus on your discipline. So, yes, that's my analysis and trade plan for Thursday. Remember, having a setup is great, but following it with discipline is what makes you consistent. If you found this helpful, make sure to like the video, share it with your trading circle, and subscribe for more daily insights. Also, let me know your views in the comments. I would love to hear your plan. Until next time, trade safe, stay disciplined, and keep growing. See you in the next video. Cheers.